We've been hearing from all the big cloud players on earnings calls, and investors are disappointed with the results. Amazon, the latest with Amazon Web Services revenue coming in light for the fourth quarter. For more, we're bringing in Ben Bajarin, CEO and principal analyst at Creative Strategies. Ben, always great to have you on the show. So we have heard, Ben, from the big cloud giants, Amazon, Alphabet, Microsoft, and there did seem to be some disappointment, Ben. You look at Amazon, AWS sales showed no acceleration there. It seemed to echo the results we saw from Microsoft and Google Clouds. What is going on there, Ben?
Yeah, I think there's a couple dynamics that we can interpret from this. I think we get lost with this idea that, a lot of this increased spend in the cloud is coming from AI, and there's part of that, which I'll get to in a second. But I think we forget that there's a lot of general purpose cloud that is still out there. And I think we saw a lot of strength in that spending. That's just, again, enterprises needing to bring their workflows from the cloud. Most estimates have that most large enterprises have 40% or less of their workflows on the cloud. So there's still a long on-ramp of just getting traditional enterprises to move basic workflows, again, we'll say general purpose workflows, to the cloud. And then you have the AI side of this. And I think where we saw a lot of the growth in that spending was, we know many organizations are out there training and deploying and doing these pilot projects for AI across their enterprise, but they're deploying those to a small fraction of their enterprise while they're doing these pilots. So we haven't seen that spend happen yet, and I think we're seeing a little bit of a pause of that, which is the result of we as an enterprise or the market segment has gone and done those pilots, and now they're waiting to mass deploy, and we think that's what's going to happen in the second half of this year.
So your bottom line, Ben, what you're arguing is the AI cloud rollout is still early, and you're betting on better prospects ahead second half of 25?
Yeah, and I think that's, again, just predicated on, all of these organizations who are doing these AI projects, whether that's in customer service or whether that's in automating a whole slew of their broad tasks from marketing to finance, engineering. That's not deployed at 100% of the enterprise. In fact, it's probably 10% on less on average. So we're waiting for that ramp. And I think that spending happens in the second half of this year. I think that's what most CIO, CTO surveys are suggesting, is that's when that money will deploy. So we're kind of in this little bit of a gap, like I said, where we're still in project phase, piloting phase. We haven't moved to deployment, and we're not seeing that scale yet like I think we will in the second half.
It was interesting, man, because when you listen to these big cloud giants, they talked about capacity constraints. So I guess that suggests, listen, we're just having a hard time getting our hands on enough data centers, hardware, chips, networking gear. What does that tell you about potentially big tech CapEx plans for the rest of this year and maybe into 26?
Yeah, I mean, I think you continue to see them commit to larger CapEx spending. I think, an interesting analysis is just look at how historically Amazon in particular, but you can tie some of this to sales, how the hyperscalers have actually seen direct correlation to CapEx spends to an increase in sales, increases in revenue. That's been a correlator for Amazon for almost 10 years now. So I think we'll continue to see that. They're justifying that CapEx spend. We still anticipate that they'll continue to spend that because, again, we are still selling a small percent of AI servers, whatever we want to classify in the AI server infrastructure, as a part of the general purpose spend. There's still a massive amount of data center infrastructure that's got to get converted into new AI infrastructure. And again, that doesn't take away from the fact that we're still selling and shipping general purpose servers. This is additive. This doesn't take away from those general purpose services. So there's a long ramp of growth here. I think we'll remain compute constrained, and that's what the race is on for. And when you hear really all the CEOs of these companies, they're saying, right, this is a once in a lifetime opportunity. We need to spend so that we get the portion of this market share. They know they're competing for that, and they're going to be at a shortage of infrastructure, which, if anything, should continue to convince us all that there's still a long roadmap of silicon and infrastructure spend, despite the negativity that the market sees there.
So is one read through, Ben, is what you're suggesting there, if I'm a viewer right now and I'm invested in NVIDIA, do I have a smile on my face?
Yeah, I mean, I think, again, they're well positioned. They're still going to be the primary beneficiary of the vast majority of this CapEx spend. You have people out there thinking they could double revenue this year. I'm not that optimistic. I think they'll do better, right, than 2024. But there again, we're going to remain compute constrained because AI innovation, and you see this, like DeepSeek again, didn't do anything to change the thesis that scaling laws still exist and will demand more compute, not less, as we bring inference costs down. And AI is outpacing our hardware compute, and that's not going to change. In fact, we probably have a long, many-year roadmap where the pace of AI software will outstrip compute. So this is a long growth cycle. I think there's a lot of technical nuances to this that just get misunderstood, which is why I think the market does what it was. But the demand is not slowing. Compute needs are going up, and that's not changing anytime soon.
Ben, always great to see you. Always great to have you on the show. Thanks for joining us.
Yep. Thanks for having me, Josh. Have a good one.